What is up guys, my name is Ignas, welcome back to the channel. Last week I've made a poll which stock market sector should be bought right now and suggested these 5 options: communication services, consumer staples, healthcare, information technology, and materials. It's no surprise to me that tech got the most votes with 42%, but it was interesting that communications actually got 0 votes. Second in line was consumer staples with 25%, and then healthcare and materials are sharing the third place with 17% each. So tech seems to be the popular pick, but unfortunately I've decided that it's time to now go with healthcare. So for today's dividend comparison I've picked 3 names, specifically from the medical devices industry. First one is Abbott Laboratories, ticker symbol ABT. This year the stock is not performing well, and the year to date it is down for 20.91%. 1 year's performance is a bit better, minus 10.37%, but in the last 5 years it is quite up there, going from $48 in 2017 to $109.88 now, up for 126.56%. It is the largest medical devices name at a market cap of $192 billion, and the stock is trading at a dividend yield of 1.71%. So this is the first one we'll take a look into, but I do have 2 more to go. Second is Medtronic, ticker symbol MDT. This year's performance here is a bit better, only minus 11.41%. A different story in 1 year, minus 24.99%, but the stock is actually up in the last 5 years, going from $83 in 2017, higher for 12.28%, to $93.97 per share. Market cap is currently at just under $125 billion, but the dividend yield here is a bit higher at 2.89%. Now the third name to finish up this comparison is Stryker Corporation, ticker symbol SYK. On the year to date the stock is down almost 20% at minus 18.94. 1 year's performance is a bit better, minus 14.17%, but in the last 5 years the stock went up quite decent, from $144 in 2017 to $217.70 now, up for 50.92%. Market cap is the smallest out of the 3 with $82.32 billion, and the stock is trading at a dividend yield of 1.28%. So these are the 3 names that we are making a dividend comparison on today, and to make that happen, let's go into Google Sheets. So in order to make a dividend comparison possible, we'll be using these 5 metrics: dividend yield, the dividend payout ratio, years of consecutive dividend increases, 5-year compound annual dividend growth rate, and the current dividend yield compared to its 5-year average. We'll take the numbers on these metrics from each stock and then add them into this table. Then we'll compare in between. The stock with the best number will get a point, we'll sum the points up, and in the end the stock with the most points will be considered the winner of this comparison. I hope that the rules will get more clear as we go, so let's start. The first metric we are looking into is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. Abbott Labs is currently paying an annual dividend of $1.88 per share, which at the price of $110.19 per share, that is a dividend yield of 1.71%. Now let us take Medtronic. They are paying an annual dividend of $2.72, so at the price of $94.20, that is a dividend yield of 2.89%. And finally Stryker. Their dividend is at $2.78, so at a stock price of $218.28, we here have a yield of 1.27%. Second metric is the dividend payout ratio. The percentage here shows what part of company's earnings are being distributed back to investors as dividends. So in ABT case, the dividend payout ratio is at 40.14%, which means that 2/5 of company's earnings are now being used for dividends. Now if we switch to MDT, their payout ratio is at 48.95%. So they are giving out almost half of their earnings for dividends. And we have SYK with a payout ratio of 26.81%, so they are assigning only 1/4 of their earnings for the dividend. Metric number 3 is the years of consecutive dividend increases. So for how many years the company has been increasing dividends for at least 1 quarter every year. In Abbott Laboratories case, they have been increasing dividends consistently for the last 50 years. Now if we take Medtronic, they've been increasing dividends for 46 years straight. And switching to Stryker, they still have an impressive but just a bit shorter history with 29 consecutive years. The next metric is the compound annual dividend growth rate. For the comparison, we'll use the 5-year average including the next year's estimate. So in Abbott Labs' case, the 5-year compound annual dividend growth rate is at 10.14%. Switching to Medtronic, and their dividend growth rate is at 6.77%. Now Stryker does have it a bit better, with a 5-year growth rate of 7.57%. Now the last metric is the dividend yield compared to its 5-year average. And to measure that, we'll be using my dividend investing watch list on Google Sheets. So we have the tab for Abbott Labs open, and here is its dividend yield history for each quarter of the last 5 years. Out of this information we can calculate that on average in the last 5 years the stock was trading at a dividend yield of 1.58%. So the best time to get in was back in 2017 with a dividend yield of 1.96% over the 5-year average for 23.83%, and worst was in 2021 where the stock was trading at a dividend yield of 1.33% under the 5-year average for 15.97%. But if we would be taking the stock right now at a dividend yield of 1.71%, that is now over the 5-year average for 8.03%. So this is here the number that we will be using for the comparison. Now let us take Medtronic, and on average in the last 5 years its dividend yield was at 2.03%. So the worst time to get in was back in 2018 at a dividend yield of 1.02% under the 5-year average for 49.72%, but taking the stock right now at 2.89%, that is way over the 5-year average for 42.46%. And now let's see Stryker. On average in 5 years, the stock was trading at a dividend yield of 1.1%. So the worst time to get in was back in 2021, with a dividend yield of 0.94% under the 5-year average for 14.25%, and we saw the best yield this year in 2022 at 1.36% over the 5-year average for 24.07%. But looking into the stock right now at a dividend yield of 1.27%, that is still quite a bit over the 5-year average for 15.86%. Now if you by any chance would be interested in doing a similar analysis on a dividend paying stock for yourself, you are able to access this watchlist by following the first link at the top of the description. Otherwise, feel free to add a ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunities in the market that I'm still missing. So we have taken all the numbers needed and filled our table. Now we can start assigning points. So the first one goes to Medtronic with the highest dividend yield at 2.89%. Second to Stryker with the lowest dividend payout ratio at 26.81%. For the years of consecutive dividend increases, a point goes to Abbott Labs with a sum of 50 years. 5-year compound annual dividend growth rate, again Abbott Labs with 10.14%. And then for the last metric, a point goes to Medtronic, where its current dividend yield is 42.46% over its 5-year average. So from these metrics, Abbott Labs got 2 points, Medtronic 2, and Stryker 1. This means that we currently have a tie between ABT and MDT. Since Stryker only got 1 point for the payout ratio, let's skip on it and reassign the point to the second best. That would be Abbott Labs with a payout ratio of 40.14%. After calculating points, we now have 3 for Abbott Laboratories, meaning that it is now considered the winner of this comparison. And that was it with the comparison. What do you think, is Abbott Labs a worthy pick right now? Share your own medical devices pick in a comment below. Also, don't forget to support the channel and leave a thumbs up under the video. If you would be interested in getting access to all my notes, then consider memberships. By becoming a member, you will get access to Discord, where I share all my Google Sheets documents and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I've looked into several other companies, so if you would be interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.